Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 8th of October, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the second week of October. And let's begin with spot gold. Let's expand this slightly, and a strong open at the start of the week and a strong push-up bullish move for first couple of days, and climbed up all the way to hit the 62 pip retracement of this swing move up, previous swing move up here, and hit that exactly before pulling back on the Wednesday, and then on Friday with the better than expected non-farm payroll report, the jobs report from the US, where there's still concern of persistent inflation with still a strong jobs growth, ongoing jobs growth, and reduced unemployment rate as well. So there's concerns that will still spur the Fed to continue its hawkish interest rate hikes for the next couple more meetings by the end of the year. The next meeting is in November, and initially the expectation was just a 0.5% increase, 50 basis points, but now there could be concerns and fears of further 75 basis points, a fourth one in a row, and that's fueling the recovery of the US dollar. You'll see that in the DXY later on, and also this caused the US stock market to fall further. And on Friday, it did dip further lower. So this is actually for the spot gold. It was just a minor pullback here on the Friday, because overall for the week it was still bullish, and it did push up above the 1700 towards the 1730, almost hit the 1730, and now has fallen back below 1700. So let's change this. This will still be a resistance zone. And now the swing low, previous swing low here, is now going to be support, interim support. And well down below is further support, but we can move this one up here now to the 1650. And this trend line was breached initially on the Tuesday. It pulled back to retest it and had the opportunity to climb back up higher, but was pulled back down below that trend line now on Friday. And this climb back up has already tested the previous swing high areas. So this possibly could signal slightly further pullback and retracement. We'll see whether it's going to continue lower down to the 1650, because this week there are quite a number of key news coming out from the US, with the key one on Thursday, the inflation report again. So if it still continues to be high, then there's even more fuel for the Fed to set a higher rate increase. Let's take a look at the weekly time frame as well, and that was the attempt to push back up, and that was from the previous week with a fairly strong hammer-like candlestick. And now we'll see if it's able to continue to climb up further. Or likely it could be a consolidation. Could be a consolidation area below the daily 55 EMA, and these swing lows, these previous swing lows, just above the 1650. So that could be a consolidation range for next week. And these fundamental news will be the key drivers where the US dollar will move to, and against the major currencies and spot gold. So let's switch over and take a look at the US dollar index. And here's the US dollar index. And right from the start of the week, it had fallen lower, weakened down to the 110 area. Expand this here. So from the 112 fell to the 110. That's the key support now at just below this swing high, previous swing high. And before recovering, finding support at the 110, recovering on a Wednesday all the way back up through the rest of the week. And on Wednesday, because of also better than expected US ISM services figures. So that helped to boost the US dollar, and all the way till Friday's jobs report, which was also slightly better than expected. So gave further fuel for the Fed to continue to increase rate at a higher rate of 75 basis points instead of 50 basis points in November. And we'll see on Thursday whether there's also going to be with the CPI figure, whether that's going to stay strong and elevated. So this coming week is going to be a key one as well for with the inflation figures. And we can actually move this to the 110 as clear support. And we'll leave this here for now. The 786 fib, along with the daily 55, and as well as the 109. So that's a critical zone support here. And just at the 138 fib, still going to be interim resistance with the key one right at the 162 fib, along with the 114 round figure. And take a look on the weekly time frame. You can see a strong bullish bounce last week and closing positive and bullish. So that could be a sign of continued bullish momentum. So it could test the resistance zone again. And we'll see if it's going to be a bullish close for next week to continue to drive it higher. That's going to be a key one for CPI figure to see if that's going to help to boost the US dollar further. That would mean more pain for the other major currencies, especially the euro and the pound sterling. And let's switch back over to the other currencies now. Let's move on to the dollar yen. And it has been consolidating in a fairly narrow range and a tight ascending triangle pattern here until the Wednesday, where it attempted to dip lower but managed to bounce back up with the better than expected US ISM services figures and climb all the way back up through the critical 145 round figure. So that could signal further BOJ intervention. Bank of Japan may intervene and not like to see the Japanese yen weaken that much. And it's coming back up to test the multi-year highs there, just below the 146. So do watch out next week if they do intervene, and that could affect your position and trading if it drives it back down lower. All right, so this is going to be a volatile one for next week. So this is still a critical resistance, and mark the other one at the 146 as well. Support is going to be lower down at the 142. We remove the 143 here. And then well below that at the 140 zone, that's the major support where the lower wick is of that intervention a couple of weeks ago, and it stayed above that and recovered from there. Okay, so watch out next week with this movement higher. That's not going to be something that the BOJ would like to see, and especially with the CPI figure coming out on Thursday, if still elevated, then signaling the potential further hawkish Fed, and this could really push the dollar even higher and cause further concern for the Bank of Japan to intervene. All right, so do be careful with the yen pairs for next week, and we'll have to watch out for the US news. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.